Good evening, ladies and gentlemen. This is Brian from Trade Algo. I wanted to go over the target trade and show you why, on paper, when we initially took the trade, it ticked all the boxes. Many of you folks know that I take trades based on confluence, and let's actually go through it step by step. I always post this document, which are my guidelines if you intend on following me in this chat room where I release trades. Let me just post it for everybody. If you've never seen this document before, I would suggest to review it at least once. It might help your trading. Here we go. Inside this document, if you click on the link, it'll take you to this document right here. On page 1, section C of the document we just opened is the Technical Analysis Bible. These are rules of technical analysis that work well if the market is neutral. Let's go to my rule 4 of my technical. Well, it's not my rules of technical analysis. They're rules of the market that I've observed that have withstood the test of time. Now, typically, markets technical analysis will work best when there's no emotion guiding the price action of the market. So, for instance, if there's positive emotion in the market, we all remember not too long ago when President Trump was elected, how the market just shot up and kept on going up like crazy. It just broke through resistance after resistance after resistance, right? So good emotion can invalidate technicals or make them weaker, if not invalidate, right? Emotion, even if it's positive, will water down your technicals. But the same is true for the opposite side of the fence. Fear, panic, bad news, like the tariffs that we keep on experiencing day after day after day after day after day. It's just non-stop with these tariffs. Today, very early in the morning, European nation slapped back tariffs, 50% on whiskey, and then he said, I'm going to slap you back with 200% tariffs. And this tariff war has continued, and it's causing a lot of fear and panic in the markets. Now, you might ask, so why are you trading them, Brian? So, couple reasons. One, we can't be analysts and just not give any trades and say, sorry guys, we're in fear, no trades for you. That would be not necessarily responsible on our part, but it'd be us kind of dropping the ball. We're risk takers. Every time we enter a trade, we're taking risk in the market. So we have to take some risk, right? How do we reduce the risk though, right? Well, what do we do in situations when there's emotion in the market? To answer this question, we have to go to rule 3. The bigger the time frame on the charts, the more respected or reliable things are on your charts. So a lot of people use the 15-minute time frame. Personally, I was about to say I despise the 15-minute time frame. I just don't like it. It's too small of a time frame for it to be reliable at all. The lowest time frame that I use is 1-hour time frames, and even the 1-hour time frame I sometimes don't trust. But obviously, the bigger the time frame on the charts, just like it says here, the more respected or reliable everything is going to be on your charts. Your Bollinger Bands work better on the 4-hour than they do on the 1-hour. Your VWAP works better on the 1-hour than on the 15-minute chart, so on and so forth. So if there's fear in the markets, it makes sense to increase the time frame, daily time frames, 1-week time frames, 1-month time frames, right? Now, it's not going to 100% combat, just completely dissipate the fear altogether, but your chances are better with a 1-week or a 1-month time frame or 1-day time frame. I'm going slow, so hopefully it makes sense for people that, are wondering why the trade didn't work out. So I'm going to show you that we had nothing but high time frame confluence, and that's what made this trade a beauty on paper. I'm going to try to go as slow as I can, but not too slow to, put people to sleep. So I know there looks like a lot of lines on the chart, so I'll try to make it as easy to follow as possible. but this is the monthly time frame, and this is target. All right, so many of you folks know I draw from the body of candles to the body of candles. So if the candle looks like this, I don't use the shadows or what people call the wicks. I always connect body to body. And if I'm connecting the top of the body, I connect to the top of another body, right? If I connect the bottom of a body, I connect the bottom of a body, right? So something like that. So connected this middle of this candle here, this apex candle on this double top, to this candle right here. Now, as Mr. Confluence says, one of our analysts, you can connect any 2 points on the chart, right? So this line would be pretty weak with just those 2 points, with just those 2 points by itself. I need another place for it to touch in order for that line to have a little bit more strength, right? So let's see if we get another touch. Was resistance, now it turns into support because we got 2 consecutive candle closes above the line. 1, 2. Now we came down and almost touched the line, not good enough. Almost touched the line again, not good enough. But then, boom, we touched it almost perfectly, almost to the penny. So now we have our third point on the line to kind of solidify this as a good trend line. All right? So if we follow the yellow brick road all the way down, we would see that when we took the trade, it was at monthly support. I want everyone to pay attention that where we took the trade was right here, right on this purple line. Everybody see that? So that is one confluence. I'm going to go through this one by one because a lot of people say, okay, so find more confluence. After viewing this, you could be like, wow, I don't know how that trade didn't work out. Me neither. So we have one thing, the 1 month sloping trend line. One confluence so far, a good one, a really good one. Now we also have an indicator that I like using, never by itself. I usually need confluence for this indicator to work. We have the monthly super trend. If everyone can pay attention right here, see this shaded area? This sometimes I use as a dynamic support and resistance, right? It already shades it in for you, and it's called the super trend. Again, this is not a crystal ball. A lot of people want the one indicator that will be like, just give me the indicator that I wish that would make everyone's life a whole lot easier. So you want to use indicators where you find a place where they intersect, right? The lines you draw, the indicators, so on and so forth. So you can see that this indicator right here, see how I'm just following the line, is very close to our entry. So we have 2 places where 2 monthly supports intersect, right? So we also had a monthly super trend support. So there's 2 confluences. I'm going to put 1 month super trend, right? So 2 confluences so far. Many of you folks know that for my trades to be official, meaning I take with more confidence, I need at least 3 or more. This is, I find this trade that it didn't work a little bit mind-blowing. So now let's go to the weekly time frame. I'm using there's only 12 of those candles a year, so that's a very high time frame, right? Now, if you guys have not seen my supply and demand class, I highly recommend that you watch it. It's on page 7 of the document I just posted in the chat. So you just click on that blue text, supply and demand. I created a YouTube video for you guys. Now, I'm not going to go into explicit detail on how supply and demand works, but there is a demand zone here. There was a very aggressive push up here, and our first red candle was up here. Now that all that green did break the previous trend, lower lows, lower highs, lower lows, lower highs. The lower highs were here and here. So green, 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 and here was our first red candle. Did we break the previous trend? We sure did. So that's what we're looking for. Aggressive pushes up that break the previous trend convincingly. And we do. So we go from the opposite color candle before all this green, this red candle here, from the body to the wick. And that creates our zone of demand. It's kind of like a support line, but it's more like a zone of support. All right, it's the way I think about it. And typically, we will bounce at the top of a demand zone, the middle of a demand zone, and especially the bottom of a demand zone. All right, so typically this would be my first entry. This was where I would likely add a little bit, and this would be, you know, my super, you know, bullish entry at the very, very bottom. So we had it was inside demand. I want to show you guys that now that we zoom in a little bit. You see where we took the trade? It was pretty much at the middle of that demand zone, right? So we have the monthly super trend right here, the monthly sloping trend line right there. See where those 2 points converge? And here's the top, middle, and bottom. It's pretty close to the middle of that demand. You see how all those points intersect in one area? That was it. It's such a gorgeous play. It's such a beautiful play on paper, guys. It's beyond. It's crazy how much fear is in the market. I mean, I haven't seen these levels of fear to invalidate such high time frame technicals in a while, since like 2022. This is giving me 2022 vibes, honestly. I'm not saying that we're going to repeat 2022. I'm saying that it has a similar feel. When high time frame supports, especially so many, intersect at one point and it's not working, it's kind of like, man, maybe we should just write puts and use the hope, wish, pray method, which I'm not in favor of. So we have weekly demand. I'm going to put 1 week demand here. We have 3 confluences now. Now I'm going to go back and show you. We also had a weekly sloping trend line. This is bonkers to me. Check this out, guys. Paint tool, can you please leave? Thank you. Connected the bottom of this candle. Again, I use the body of the candle. I never use the wicks. The body of this candle here to the body of this candle here. That's how this line was created, this line of support. And you can see that it served as support. Boing, boing. Went a little bit beyond our line, which is common sometimes with high time frame supports, and then look how it went up the next, 6, 7, 8 weeks. And this is normal sometimes when we go beyond our support line. It's actually one of my rules for technical analysis. It's okay to go beneath a high time frame support, even if it's a lot. The bigger the time frame on the charts you're making the trade from, the wider you have to make your stop, the more room or time you have to give your trade. So let's go back to target. Look what happened here when it was used as support. See how low we went, and then before the week ended, boop, 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 boop. And then it just next followed subsequent weeks, boom, 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 it went higher. That's kind of what I was expecting with this trade. But this trade just kept on going lower and lower and lower, and it's just like, bro, come on. Is there really that much fear in the market to completely invalidate the technicals? So we had another sloping trend line of support right here. Oh, and there's another support that I did. So look, before I get to the other support that we just missed together, so we have weekly, 1 week, sloping trend line, ST. There was another monthly support right here, folks. Let me go to the monthly chart again. So there was actually 3 monthly supports. Many of you folks know that I draw my support and resistance lines where there are pivots in the chart. This was a red week. This was a super red week. We had a little bit of a week of consolidation, and then boom, shot up. And it actually formed a nice morning star pattern where you have a big red candle, a little bit of consolidation, sometimes a doji, a candle of indecision, and as long as the next green candle is above 50% of the previous red candle, this is a reversal. This is called a reversal pattern called a morning star, and this is definitely a morning star, right? There's no two ways about it. So this is where I draw my line, at the bottom of the red. Typically, so this is also a monthly horizontal support. You see where all these points converge? Sloping trend line, the weekly sloping trend line, the monthly support, the monthly super trend, the middle of a weekly. It's so much confluence in one area. It's mind-bending. It's totally mind-boggling that no bounce in sight. I find that unbelievable. So now that would be our 5th confluence. We had the monthly sloping trend line, 1 month sloping trend line. We had the monthly horizontal support that I just showed you guys, so I'll put horizontal support. We had the monthly super trend, 1 month ST. We had the weekly 1 week sloping trend line. And then we had the weekly demand zone, the middle of the demand. So this is 5 confluences, guys. It's also super oversold. Just take my word for it. The RSI is so beat up, it's ridiculous. The daily time frame looks disgusting. And I'm pretty sure there's another support. Oh, there was another one right here. Now let's go to the daily time frame. Bear with me. We had a daily demand inside a weekly demand zone, guys. So This is the daily time frame, just like the weekly that we drew and identified earlier. Here was the downtrend on the daily, lower lows, lower highs, lower low, lower high, lower low, lower high, lower low, lower high. And then we had, look at this big push up with green. Did this big push up before we get a red candle invalidate all those higher lows? Yes, it did. That's a check mark, by the way. So we go from the opposite color candle right there, from body to wick. Actually, I'm just going to redraw it for everybody. So from the body right here to the wick, and then it's a daily demand zone inside a weekly demand zone. And look what we did today, ladies and gentlemen. Just blew right past it. We got a candle close underneath this daily demand zone. That's why I took it off my charts. So we had 7 confluences. I'm sure there are more. This is mind-bending. It's rare for me to find something with 7 confluences. Normally I only look for 3. This is over 2 times the bare minimum confluence I'm looking for. Actually more, 7. Like double, plus 1 confluences. And they're all high time frame. Remember, the bigger the time frame on the charts, the more your technicals should work. Now, obviously, this is just a testament to how much fear there is in the market. The more emotion there is in the market, the more watered down your technicals would be. So it's no guarantee, ladies and gentlemen, that trade with no trade is, there's no guaranteed trades anywhere, right? But we lower the probability by taking certain steps, increasing the time frame on the charts. The more confluence we have on the charts, the more confidence you should have. I actually put that in my section F of the guidelines that I post many times. Here we go. So it says here, for trades to be official, Brian needs at least 3 things to support a bullish or bearish bias. Confluence. Target trade had 7. And this is kind of, I repeat to a lot of beginners, the more confluence, the more confidence your trade should have. Confidence does not come from emotions. It comes from how much are the charts yelling at you to buy or sell, right? Target is a trade I would take over and over again, even if they were, and it's rare. I have never seen a trade with 7 confluences fail this miserably, guys. So, it's just making me think that if we don't get, and this is how we adjust to the market, right? So if we have 7 confluences and I put in my journal, and I have to go back and review, why didn't it work, right? Why did it not work? You might have to start writing in your journal, okay? So if we have, 7 places where it intersects in one point and we don't immediately start bouncing, cut the trade. So that might be the adjustment we might be making moving forward. Every bad trade, or I wouldn't even call it a bad trade, every trade that didn't end up in a gain should teach you something, or should give you more confidence subconsciously because you're following your rules, you're doing something. And this is how we tweak and adjust our strategy. It's unfortunate. I don't want a single person to lose even a single penny or dollar. But I would take that trade every day of the week and twice on Friday. So in my journal, when I go to my journal, I don't even know if I'd want to wait for another one of those instances. I'm going to start thinking at the back of my mind, if we see something with a lot of confluence, right? If we don't start bouncing almost immediately, I'm done with the trade. I need, based off that last trade, if we don't get immediate bounces, that might be a way to adjust to this market, right? Because we've been getting the word tariff every day for the last 3 weeks nonstop. The gentleman, unfortunately, can't stop saying the word. And I'm not here to make any political opinions. It's just in reference to the market. I only talk about it because of money, right? So I'm not here to ruffle feathers or trigger people. But the simple matter is, if even Jim Cramer comes out and makes a statement on it, it's because all eyes are on it. That's why. So I really hope this helps, guys. I'm very careful about what trades I put in the Telegram, and I really, really make sure that they have confluence. But from now on, I'm going to cut the trade if I do put something with a lot of confluence. That was a gorgeous trade. I cannot stress enough how gorgeous and beautiful of a trade that was on paper. But sometimes the market movers go, yeah, everyone's probably going to jump into that. Let's just ruin their trade. And I thought I gave it enough time. Typically, My technical analysis Bible says, okay, so you're going to make trades on the weekly and monthly time frame. You need at least a 3 to 8 week expiration date. I gave that sucker a lot of time so that it would depreciate slowly. But the fear in the market, unfortunately, invalidated our technicals. It's unfortunate. But again, I wanted to show you guys it was a risk worth taking, right? I wish I could find another analogy for you guys. So it's something that it's a loss, ironically enough, that I feel good about. I don't know if that makes sense to a lot, but the experienced traders would be like, yeah, man, you followed your rules. That's pretty awesome. So, um, if you guys have questions, always, you guys can email me at brian@tradealgo.com. Of course, if there's support questions, like, hey, my membership fee didn't go through or something, that I'm not in support, unfortunately. I apologize. I'd love to help you personally, but I wish I wore that many hats. If it's technical analysis related or, can you review my journal and stuff like that, I'm happy to do that for you guys. Anything to help level you guys up. It's my first name, Brian, like November, at the name of the company, tradealgo.com. Alrighty, folks. Yeah, we got stopped out at the 50% mark, so I hate getting stopped out, but it is what it is. Alrighty, guys, on that note, have a wonderful evening, and I'll see you guys in the next one. As always, take care.